This podcast is for informational and educational purposes only. It is not intended as and should not be taken as professional financial, investment, tax, or legal advice. The content presented here does not constitute a recommendation or endorsement of any specific investment strategy or financial product. Any discussions of past or historic financial performance or investment returns are not to be regarded as a forecast or guarantee of future results. Listeners are advised to consult with a qualified professional before making any financial decisions. Any reliance on the information provided in this podcast is at your own risk. Financial markets are inherently risky. And again, past performance is not indicative of future results. The opinions expressed on this podcast are those of the individual speakers and do not necessarily reflect the views of each speaker's company or employer or their affiliates. The completeness or timeliness of the information presented cannot be guaranteed. By listening to this podcast, you acknowledge that you understand and accept these terms and conditions.
Welcome back to the Scaling Station podcast, where we highlight how real estate, PropTech, and financial leaders are rethinking the way deals get done. I'm your host, Will Rodosky, and today I'm joined by a very special guest, Harold Hofer. Harold, how's it going?
It's going great, Will. How are you?
Great. I appreciate you making the time and joining me.
Absolutely.
Awesome.
Well, I'm with a company called Alture. Alture Funds is a digital platform where retail investors, regardless of their net worth or their accreditation, can buy shares in large alternative investment funds sponsored by, in the current instance, a large legacy investment sponsor called BlueRock. One's private real estate and one's private credit. But let me take a little bit, just a couple steps back and tell you, why we came to where we are today with this Alture Funds concept. So in 2012, I started a company called Rich Uncles. My partner at the time, my co-founder, was a guy named Ray Huerta. Ray was the then chairman of the board of CBRE, which is the world's largest real estate services company. He had already retired as CEO, but he was a very smart guy in the real estate space globally. Probably one of the top executives in real estate globally. But Ray had an idea, say, listen, when the Jobs Act came out in 2012, post-global financial crisis, Congress passed this thing called the Jobs Act, Jumpstart Our Business Startups. And the idea was it would liberalize the way that people could solicit capital to invest in private investments, And it was mainly focused towards, Reg D, private placement type deals, where it liberalized the way that you could solicit capital for those sorts of deals. But we had the idea, say, listen, now that people are going to be using the internet as a digital interface through which to solicit investment capital, rather than meeting you at a country club or church or a bar or whatever to try to pitch you a deal, this could now be done over the internet. So why don't we launch on the platform an offering open to everybody, not just millionaires or credit investors. Let's have an offering open to everybody. So Rich Uncle started in 2012, and initially we had an in-state California public offering where we were registered with the Department of Corporations and allowed us within California to solicit capital from any investor, regardless of net worth, in very small increments. I think $1,000 was a minimum investment size. So we had a $25 million offering to test it out here in California, and it was very successful. We kind of blew through the $25 million, we upsized it to $50 million, blew through that, upsized it to $100 million. So we were, the market was really responding well to the idea of, hey, yes, I'd like to invest in real estate in a small increment with guys that know what they're doing. And so we then went national. We've had a fully registered offering with the SEC where we could raise capital from the public in small increments, regardless of the investor's net worth or their income levels. And we got the portfolio about $500 million at the end of 2018. And then we decided to take the parent company that Ray and I and others had invested in and sponsored and the REIT together collectively public. And we did that in 2019. So right now, that company still exists in the New York Stock Exchange. It's been renamed Motive, MODIV, More Dividends. It trades under the ticker MDV. But through that whole process, this parallel fashion, things were evolving in the world. And one was that in 2017, Blackstone, which is the world's largest alternative investment manager, over $1 trillion they manage. About a third is real estate, about a third is private equity, and the other third is private credit and infrastructure. Blackstone, who'd been around since the 1980s and had pitched every pension fund, every endowment fund, every foundation across the world to invest in their big deals at $5 million increments or $10 million minimum increments. They had the foresight to say, hey, why don't we start expanding the way we solicit capital to go to the public at large, individual investors. And so they launched this thing called BREIT, Blackstone Real Estate Income Trust, back in 2017, and that was available to any investor that wanted to buy it. Sold exclusively through a human wealth manager intermediary, through a broker-dealer or through a registered investment advisor, but they were enormously successful with that as well. They raised, $60 billion plus through that fund through 2023, 2024, whenever it was. So they proved that, yes, there's a huge demand from the retail investing public to tap into the expertise of these large, big, huge alternative investment sponsors like Blackstone, and KKR has deals in that space now, and Apollo does, and Ares does, and others. The next frontier for them was to raise capital direct to consumer from human wealth managers. They had no direct component themselves. Blackstone has a website, and BREIT has its own website within the Blackstone website. And if you want to invest, they say, if you'd like to invest, we'll contact your financial services intermediary. So all of that capital that's been raised was raised through a human wealth manager. It was either a broker-dealer or an RIA, but somebody was human to human. So our current business model is, rather than be the sponsor of our own Next Rich Uncle's REIT, why don't we tap into some of these huge mega funds that have evolved since we started Rich Uncles, and let us be the conduit through which people can invest in those deals on a direct-to-consumer basis. You don't need to have a human wealth manager. I don't need to meet you, at your country club or for lunch or whatever to try to pitch you to buy the deal. You can go to our website, and if you want to invest, go right ahead. So last year we went out and we spoke to about a half dozen of these big, huge players in this, non-traded public offering space, not just real estate, it's private credit, private equity, infrastructure. And we said, hey, you guys have been very successful in raising capital from individual investors, but all through a human wealth manager intermediary. Why don't you expand what you're doing to include a direct-to-consumer investor? So much capital in the U.S. today is self-managed without a human advisor, so to speak. You're ignoring that those trillions of dollars of potential capital you could be tapping into that's self-managed, and that self-management is only going to increase over time as people, people say south of age 45 that are digital natives, they start inheriting money, making more money in their careers, investing money on their own. They may ultimately engage a human wealth manager if they haven't yet, but they might not, and they might only give a portion of their holdings to a human wealth manager to manage. So why are you not addressing this huge next horizon for you folks, which is individual investors accessed over a digital interface? So Alture Funds, which we just formed this year, just launched actually. I partnered up with a guy named Alex Cruttenden. So Alex is local as well. Alex's father and brother founded the investment app Acorns back in, I say 2014, I'm going to say something like that. And Acorns has been a hugely successful app for micro investing and robo-advising and that sort of thing. They don't do alternative investments. We've talked to them about it. Hey, why don't you guys include alternative investments? For a variety of reasons, they're not ready to do that yet. But regardless, so Alex was, kind of grew up with Acorns as well. He was a college kid at the time, but, was one of the first guys on the product team. How do you develop a website? How do you make it engaging for a customer to come there? How do you put an online onboarding subscription agreement for the consumer on a platform to digitally invest? So Alex and I started Alture Funds, and we in turn hooked up with a company called Blue Rock. So Blue Rock is a national company that does alternative investments, multi-billion-dollar track record in alternative investment space. So in the same space as Blackstone and Ares and Apollo, but they're a top 10 player, but not a top 5 player or top 3 player. But they're a player in that space. So they have a $4 billion real estate fund, open to non-accredited investors, $2,500 minimum. And they've got a $180 million private credit fund, again, open to non-accredited investors and a $2,500 minimum. So we've signed an agreement with them to have their deals on our platform. So this is the first time, to my knowledge, there is an online digital investment platform solely focused on marketing alternative investments sponsored by these large legacy investment sponsors. So we are in effect a broker-dealer, but we're not a human broker-dealer. You don't come to our office and we buy a cup of coffee or lunch or whatever and try to pitch you these deals. We try to get you to our website, and if you're so inclined, go ahead and invest. So that's the current awesome thesis, and the idea is that yes, the next horizon for all these big huge sponsors to breach or broach, whatever that term is, to get past is going to be, hey, let's expand distribution not just to individual investors represented by some human wealth manager. Let's further expand distribution to everybody, regardless if they have a human wealth manager or not. And these guys, these big sponsors, don't want to deal directly with consumers. I know that Blue Rock, for example, you go to their website or Blackstone's website. If you want to invest, they say, well, contact your financial advisor. That's how you can invest. They want to have, certainly Blue Rock wants to have kind of a licensed investment fiduciary between them and the customer. They want to have a licensed registered investment advisor or a licensed broker-dealer that they engage with, and those broker-dealers and REAs then engage with the clients that actually invest. So we're effectively a broker-dealer, just like any other broker-dealer, except we're soliciting customers over the internet rather than down at church or some kid's soccer game, talking to another parent, or a country club, or wherever you might potentially meet people to close them as customers. Our business model is, hey, let's use the internet as a common meeting place for people to come and buy these deals. So that's kind of who we are and what we're all about. And as concerns real estate, that's just one form of alternative investments, and we do have a real estate deal on the platform. As far as tech is concerned, yes, our fintech, wealth tech platform are using technology to deliver these fractionalized huge investments to customers over a digital interface. We've kind of put the whole Blue Rock subscription agreement, onboarding agreement, into several screens on the platform. You can buy shares in their deals in 5 minutes on your phone. Historically, you'd have to fill out a form, put an envelope with a check, and mail it somewhere. Right now, you can just do it all on your phone or your computer in minutes and effectively have the same end result. You're a shareholder in one of their deals, earning yields. The private credit deal that they have is paid historically 11.7% annually on a quarterly basis, and the real estate deal 5.25% annually on a quarterly basis. And performance, no guarantees of future results. Who knows? Those could change tomorrow, but that's what they've historically have done. So I'll pipe down now, Will, and kind of let you ask any questions you might have, and
No, that was
anything that comes to mind.
Yeah, no, I appreciate you sharing. A lot of the themes in your thesis definitely resonate with myself, and I think a lot of 26-year-olds out there, or mid-20s, that choose to now max out their Roth IRA before contributing 6% each year to a 401k with like 5 selections or 3 target date funds or mutual funds. So yeah, I definitely feel that trend. I think like Robinhood, Acorns, and then just instant access to technology is kind of causing that shift. But curious if there was any one event, or you could just speak to maybe why so many people are shifting away from wealth managers and choosing to now manage their money themselves.
I don't think well, first of all, a lot of wealth managers today, if you don't have $1 million, they don't want to deal with you because it's not worth their while. So if your typical registered investment advisor, for example, charges 100 basis points or 1% management fee, 1% of $1 million is what, $10,000? I mean, so it's you have a lot of money for them to even want to take you on in the first place these days. That's number one. But it's just a lot of tools available on the internet. When I used to have a human wealth manager, I go to the person's office a couple times a year, and you sit down and you talk and this and that. Well, what if I want to do stuff more frequently? What if I want to see what's going on in the market? What if I want to make a trade? Let's say I want to buy Tesla. I think Tesla's too beat up. I want to buy Tesla. Well, I got to call my guy to place a trade for me. Why can't I just go to Robinhood and do that trade myself in 2 seconds? So I think it's just ease of use. And I think the amount of information available on the internet, the amount of investment options available on the internet are great. So it's not necessarily wealth managers are bad, broker-dealers or registered investment advisors. Just so many easier ways to do things. Kind of like when Amazon came and totally disrupted how things were bought. How you bought household items. Now it's so easy. Doesn't mean that going to the retail store was bad, but if you could just have a couple clicks on your computer screen and have that bar of soap delivered to your house the next day, or maybe even the same day, I don't have to go to the grocery store to pick that up. So I think there'll always be a place for human wealth advisors. I don't see that going away, but I just think people your age that are managing their own money, you don't necessarily, you can do it all yourself. So why go there, And by the way, you mentioned Roth IRAs. This particular, the Blue Rock type products are really well suited for self-directed IRA type deals. So the self-directed IRA space has just exploded over the last 10, 15 years, and so much of capital for retirement is now being self-managed as well. And these products are really well suited for that type of capital, longer term patient capital.
Sure. And from like a user perspective, what is like onboarding, or I guess getting started? Say I have $3,000 and I'm interested in the private credit fund. What does that look like from my end?
You just go to our website, and start investing. And there's an onboarding flow. They'll ask you your name, social, address, and whatnot. And it just like just be like opening an account with Robinhood or opening an account with Robo, similar type of questions. You'll have questions that are geared towards this particular investment being private credit. If you only had $3,000, $2,500 allocated to private credit might be too much. In my personal opinion, that's the minimum. If you had $30,000, $2,500 might be appropriately allocated there. So it's a very digital, user-friendly, I don't even want to even screen share here, but super user-friendly experience to buy shares. So hold on, just go to our website right now. Hold on a second, Will.
Yeah, you're good.
But yeah, the idea is that we wanted to make, if you already have an account with, say, Robinhood or any of these other platforms. I'm trying to figure out how to screen share. I've never been on.
Yeah, let's see.
I've never done this particular your this Riverside thing before, but let's see here. Window, entire screen. Okay.
Oh, it's loading up.
So can you see?
Yes, we're in.
You see Alture Funds? We're in? Okay. So this is what the platform looks like, and kudos to Alex, our guy Alex, to design this whole thing here. But there's a lot of explanation about what we're doing, exploring the funds. We got the Blue Rock private credit deal, the private real estate deal. The fact that Blue Rock is managing these investments, not us. Multi-billion-dollar track record. You're investing in a pool of this $30 billion worth of underlying loans, 2,000 loans. You're buying it for $2,500. You're buying exposure to that. But let's say you wanted to invest, right? So you have multiple prompts here to invest. So when you click, I want to go through the whole site here. Anyways, this is a platform, right? But if you wanted to invest, and I apologize that I'm screening it through here, but
no, love it.
Yeah. So start investing, right? There's multiple prompts there to start investing. So the idea is that, okay, log in one-time code. Well, I don't know if we go through this whole process here, but the idea is that I don't want to waste too much of your time, Will, on this, but because it's going to be a bit of a process. But the idea is that this would be no different than you signing up for an account on Acorns or Robinhood or whatever.
Yeah.
And it was designed to make it a very similar user experience. So if you already have accounts like that, say, yeah, I know what this is like. I understand these type of questions that they're asking.
And you can track like portfolio performance.
Yeah. So you'll have a personal dashboard on our website. Where you can look at how much you've invested, if you're reinvesting dividends, what your account size has grown to, if there's been distributions made, where they went, if you elected to get your distributions in cash. It's a 1099 reporting investment. Both of these are 1099 reporting investments. So if you need your tax return information, 1099 is just a simple one-pager that comes out by January 31 by law for all these investments. So you'd have that real early to file with your taxes. So, but yeah, you'd have your own personal dashboard on the website as if you were with Robinhood or Acorns or whatever. Also, you'd be on you'd also get communication from Blue Rock because they send a Blue Rock communication to all investors, as well. Updates, quarterly reports and whatnot. You'd be getting all that as well.
Nice. That's easy.
So, yeah. So the idea is that, hey, this is kind of for alternative investments, which includes real estate. I know you're a real estate guy yourself personally, but for alternative investments that include real estate, how do you access this stuff? And whether it's your buddy or your cousin, your uncle or whatever is doing a fix and flip and, hey, Will, can you give me $5,000? I need $50,000 total to, renovate this place and flip it for a profit, and you'll get a piece of that action. Yeah, that stuff's all good. But if you're a longer-term investor, more passive investor, and just want to let this stuff roll for years, this is good as well.
Sure. And you mentioned working with Blue Rock. Just curious how that relationship came about.
Well, when Alex and I decided to do this and realized, rather than trying to form our own REIT like we do the rich uncles and whatnot, let's try to hook up with some of these big, huge sponsors. So we identified we knew who all the big players were, Blackstone and others, and we wanted to see who would talk to us. This is our idea. Would you talk to us? Talked about half a dozen players. Didn't include Blackstone, but the thesis was say, hey, you're raising hundreds of millions of dollars from the public through these large public non-traded vehicles for private credit, for real estate, private equity. Why don't you expand that distribution to include the digital native crowd? Why is it limited to this human wealth manager chain? So all these companies just take another step back. Like Blue Rock, for example, they've got a nationwide team of wholesalers. They've got a nationwide team of people that all they do all day, every day, is they go to whoever's in their territory, every RIA and every broker-dealer in their territory, and take them to lunch, take them out for golf, take them out to dinner, take them out for drinks, and saying, hey, please add our deal to your platform. If it's already there, please sell our deal and not Blackstone's deal or Starwood's deal or whomever. So that's already well established. But the pitch with all these people is say, hey, the next avenue of expansion for you is direct to consumer. But BlueRock was the first one that said, you know what, I agree with you guys, let's give it a shot, and we're talking to others right now. But so we liked BlueRock because they had not just a real estate deal, and real estate, quite frankly, has rotated out of favor the last couple of years. So it's a tougher sell. And private credit's actually really hot right now. So we have both of their deals. We like the fact they had two deals available to non-accredited, non-million investors, $2,500 increments, and they were good to go. So
Nice.
yeah, so we went out and pitched them basically with
Sure.
this idea.
And I think you talked about expanding into other asset classes, perhaps like private equity, infrastructure.
Yes,
Is that on the horizon, or
it's on the horizon. We're talking to
Yeah.
two infrastructure sponsors right now. I think infrastructure is another hot category. Infrastructure is like, building bridges, airports, data centers, and whatnot. And the reason these alternative investments exist, one of the reasons they exist to begin with, is that the public markets can only provide so much credit for, whether it's the equity markets or the bond markets. The demand for capital exceeds what the public markets can provide, and certainly infrastructure is in that category as well. So we're talking to two sponsors for infrastructure, and part of the interesting thing, Will, it's kind of hard to believe, but so BlueRock and all these other guys, they hire third-party fund administrators to kind of handle all the paperwork with investors. Paperwork goes to them, they put it all into a system, they keep track of it, change of address. So they all hire third-party fund administrators. BlueRock has one that does a lot of business with a lot of sponsors, but they have never yet dealt with a direct-to-consumer platform like ours. So if you went to your human wealth manager today and wanted to buy some shares in BlueRock, you'd fill out a paper form, you'd place an envelope with a check and mail it to this fund administrator, and they would, that's how it would go. So to get this fund administrator to accept a subscription agreement, all the same information, name, social, investment horizon, whatever the questions are, typical subscription agreement, to get them to accept it digitally versus paperwork. That's hurdle number one. And also, they don't accept money by ACH. So our business model is that people come to our platform, they buy their shares with a software called Plaid. So Plaid kind of connects you to your bank account, Wells Fargo, B of A, Chase, whatever. You click on your account, you put in your username and password, and you can transfer money very easily and seamlessly that way through an ACH transaction. Their fund administrator is not equipped to accept that kind of money yet, right? So if you wanted to buy shares, you'd have to either mail them a check or have a wire transfer, they being BlueRock's fund administrator. So we're talking to these other platforms, but it's been a lot of time and effort on our part to just get this fund administrator to accept a subscription agreement and capital the way we're delivering it. To the two infrastructure sponsors we're talking to have fund administrators that are not BlueRock's fund administrator. So to go through that educational process again, it's going to be a bit of an effort. But yeah, we'll get it done. But the idea is that this whole area is so ripe for disruption, or so ripe for modernization, that it's almost laughable. They still have fax machines and whatnot, but not laughable. It's a lot of time, effort, and money on our part to try to get them to sit still and pay attention to us, because we're an unknown, unproven commodity at this time, from their perspective. We're leaning on them pretty hard, and leaning on BlueRock pretty hard to say, hey, you got to modernize and be able to accept all the same information that you want on a paper subdoc digitally, and also accept the capital through an ACH transfer rather than through a printed check or a wire transfer. Yeah. Long answer to your short, simple question is, yeah, we want to layer in other funds, infrastructure, private equity, hedge funds. It's going to be a bit of a dance with their fund administrators as to how we actually do that, to get them to accept the stuff the way we're delivering it, if that makes sense.
No, it does. I believe that they'll get it. And I think you mentioned perhaps a dollar value even, but for the year 2024. But how big do you think this direct-to-consumer kind of alt space can get in the next few years?
That's a great question. So last year, there's a company called Stanger out there. It's an investment bank that kind of specializes in this whole retail channel alternative investment space, and they track how much sales are occurring through Blackstone's BlueRock deals, Starwood, Apollo, all these guys. They aggregate all that all those results. And last year in 2024, $80 billion, 80 with a B, $1 billion of capital was raised in these non-traded public vehicles, open to all investors, $500 minimums. $80 billion was raised. And real estate was actually kind of a small piece of that. The biggest part of it was private credit. So it's an $80 billion existing universe out there that's tapping into, say, only 90%, 85% of the potential capital out there, because 10% or 15% of the money they could get is currently self-managed. Could the $80 billion have been $81 billion if we were around a year ago? $82 billion, $80.5 billion? I don't know. But we think that clearly there's demand for this product, and the fact that these huge sponsors aren't yet tapping into the direct-to-consumer, do-it-yourself investor base, it'll change. I think that to say that by the year 2035, 10 years from now, all these sponsors will have some direct-to-consumer component, that $80 billion will be $200 billion, and 25% of it's going to come direct-to-consumer. That's just my crystal ball analysis. So you heard it here first, Will. We'll check back in 2035 and see how close I was. But that's the thesis, right? That alts will just only get bigger and bigger, number one. And number two, the ability to access these alts products digitally is only going to get bigger as well.
Yeah, no, that definitely makes sense with how hard they are to access now.
Yeah.
And obviously, that's what you guys are solving. It's awesome. And I guess what excites you the most right now as a founder with Alture?
I was a founder with Rich Uncles as well. I mean, a lot of sleepless nights. You think at my age, why I still have sleepless nights? But sleepless nights, we're trying to solve a problem. So it's like a puzzle you're trying to solve a problem for, and a lot of moving parts. Okay, how do we get people to our website to begin with? Once they're there, how do we create a compelling enough journey that, okay, yeah, I do want to invest? How do we get people to put up $2,500? Rich Uncles, $100 minimum. That's a lot. We had one product that was $100 minimum, so that's a much easier check to cut than $2,500. So we've just got to create content like we're creating today with you, and just continue to evangelize about, hey, this is what we're doing. Yeah, I'm one of the people that I don't believe in sitting still. I feel like I still have something to contribute. I got a lot of energy. I'm not a sit around type of guy. Yeah, this is fun for me to go out and do this, and again, trying to see what I perceive to be a void in the market, a hole in the market. Why does that exist, and how do you solve that problem? The void being, hey, these are great financial products, $80 billion of which were sold last year, but you just can't go to a website like ours and buy shares. Why does it work that way? And it's not going to be the way forever. We're the first one cracking this nut. Others will follow. We just got to get enough market share that we're the clear market leader before others wake up.
Right. Maybe the game. Awesome. And for listeners out there, can they find you on LinkedIn, or what are some ways to follow along?
Well, yeah, they go to alturefunds.com, ALTURE funds, FUNDS.com. I'm on LinkedIn, Harold Hofer. Yeah, reach out to me. No, that's great as well. But go to the website, poke around, make an investment. Again, it's really well suited for self-directed IRAs. And yeah, that's kind of who we are, what we're doing.
Awesome. Well, I'll leave a link to Alture Funds' website in the description below. But if anyone wants to follow along Harold's journey, he's on LinkedIn as well. Harold, thank you so much for joining me.
Sure, Will. Absolutely. All right. Talk to you soon. Right. Thanks so much.